I'm Ashton Addison from Blockwest Capital for Investment Pitch Media and the Crypto Coin Show. And today on Blockchain Interviews, we have Michael Bentley, the CEO of Euler. Michael, welcome to the show, and thank you for taking the time to come on today.
Yeah, thanks, Ashton. Really great to be here.
Yeah, I'm excited to dive into the intricacies of DeFi. I know you're fairly familiar with it, and Euler has an interesting perspective that I think is going to be more moving forward, more predominantly the way that I think DeFi is going to move into. And I'd love to hear your thoughts on that later in the interview. But to kick us off, could you just talk a little bit about Euler, the platform, what your team is doing in DeFi?
Yeah, sure. So we've built Euler as a permissionless lending protocol, which allows users to deposit almost any crypto asset, any fungible token into a liquidity pool, and allow borrowers to come and take assets from that pool and go away into the wider DeFi ecosystem and trade with them, arbitrage, hedge their positions, and so on. The borrowers are going to pay interest to the lenders, which means that the lenders, the guys depositing into the pools, earn a yield on almost any crypto asset. So we are a lending and borrowing protocol that's fully permissionless. You can activate any market yourself on the protocol. We're built on top of Uniswap v3, which is of course a permissionless trading protocol. And once you've activated a lending market, it's good to go straight away. This really opens up the space of possibilities for people now to be able to earn yield on a whole bunch of assets that they previously couldn't do.
Very cool, Michael. Thanks for that intro. And I'd love to dive into that permissionless part a little bit more, just to understand the difference between regular DeFi protocols that are, decentralized, not a CeFi, and then the permissionless and like being able to add your own assets. Is that something that is the normal in a regular DeFi protocol?
In some protocols, yes, like Uniswap, for example, is a great example. On Uniswap, you can activate a trading pair for almost any token, right, and get started straight away. But in the lending and borrowing space, that's not really the case right now. It is for some protocols, which we can get into later if you like. But for two of the biggest protocols, Compound and Aave, they operate on more of a permissioned kind of listing process, where users have to create proposals to create new asset markets on those protocols. And so if you want to lend or borrow your favorite new token, you would have to go through quite a lengthy process to get that token listed on those protocols. Whereas on Euler, you'd be able to come and activate a lending and borrowing market for it straight away. There's some trade-offs with that approach, to be honest, and a lot of those come around risk management. So the reason other protocols don't allow this permissionless listing aspect is that listing almost any asset really does open up a whole world of possibilities in terms of new risks to the protocol. Some of those risks are localized to the people lending and borrowing on that asset, and some of those risks are more systemic. They really affect the whole protocol. If a particular collateral asset really goes down, then that could bring down the whole protocol and leave all sorts of lenders and borrowers suffering various kinds of losses. Euler implements the way that Euler works, and the way that we allow users to do this permissionless listing process is that we build on top of Uniswap v3. That allows us to get price oracles, which tell us essentially what these assets are worth, and allow us to determine how much people can lend and borrow on the protocol to stay in to stay out of violation. This essentially means that almost any asset can be used. How do we then mitigate the risks of some assets being malicious or super illiquid? Well, the truth is that when new assets are listed on the protocol, they go into a kind of isolated borrowing mode where all the risks are contained within that particular market, similar to how all the risks, with tokens are specific to the trading pair on Uniswap. All the lending and borrowing risks are isolated to that particular market on Euler in the first instance, which really protects the protocol as a whole and puts the lenders and borrowers on that market, makes them responsible for whether or not they're prepared to take on the risks of lending or borrowing on that particular market. We really try to make transparent as well the risks associated with lending and borrowing on those isolated markets, on the really riskiest of markets. So it's really up to you as a user at that point whether or not you want to engage with that market. ultimately, that kind of process can be somewhat capital inefficient. We have to set very conservative risk parameters to enable that permissionless listing to really work. And so ultimately, we have a process of governance upgrades where people can vote to promote assets that they know are not malicious, that they know are fully liquid on the market, that have reliable price feeds. We allow them to promote them up a series of asset tiers, which means that they can be used in a more capital efficient way. So, for example, some of the the popular DeFi tokens and stablecoins and ETH and BTC will be able to use as collateral assets, and they're probably the collateral assets are always the riskiest assets for a protocol, a lending and borrowing protocol, but they are the most capital efficient as well, and perhaps the most useful assets on a lending and borrowing protocol. But we're very, very conservative about what assets initially can be used as collateral, and that's the way that we protect lenders and borrowers.
Yeah, I think that's a great mechanism that your team has built out, Michael, because DeFi itself has just allowed so much more liquidity and access to capital for people that didn't previously have it. But there were still limitations, and now moving with NFTs or having other assets that might be sort of illiquid, how can you lend against those, borrow against those, and move them into a protocol without having to get the board of directors approval and 10 levels of bureaucracy just to get some liquidity on an asset? How do you build a mechanism that protects risk and protects from assets that are fraudulent or faulty or anything like that, and build that out in a decentralized way is really tough, and I don't think people understand that fully. So props to your team for coming out with a protocol that can actually do this.
Yeah, thanks. It's been a long development cycle, and it's taken an awful lot of research and development just to get where we are now. It's been 16 months since we started building the protocol, and we've had to keep our eyes closely on the market as well and learn the lessons of from failed experiments elsewhere. There's been a lot of hacks, particularly on lending and borrowing protocols, very notably over the past 16 to 18 months. So it's probably one of the hardest problems in DeFi, to be honest, and it does it's been a really, really tough development cycle, but we're very, very pleased I'm very proud of what we've built, and we've been very, very risk conscious whilst building this protocol. It's been audited by 5 different partners and viewed by many, many more people. So it's a real challenge to build in this space, but I think it's going to be very rewarding, and it's a really important service for the wider DeFi ecosystem. So I think and hope it will work out well.
I think it will. And especially starting 16 months ago, as you just mentioned, DeFi was a lot smaller there. It's been growing exponentially every month, and you have to anticipate where the market's moving in the future. And I saw that you recently came out with like a Mainnet Launch. Maybe you could talk about that launch, what that means for Euler, and where do you go from there?
Yeah, definitely. So we've been sort of working in a development mode now for a long time, and we opened up our testnet just a few weeks ago, really, to allow people to experiment with Euler in a risk managed way. Obviously they can use test tokens. We've mocked all the tokens up on the testnet on the Robston version, so that the prices match the mainnet, and people can come on and play around make themselves millionaires for a day and play around with tokens, lend or borrow what they want, and really experiment with the system in a safe environment. But ultimately, testnet has many differences to mainnet, and of course it's important to get out there and launch so that people can use Euler in the real world. And so we launched very recently, on Monday actually, our mainnet deployment, which people can go on and view now and play around with. We're launching the protocol in 2 phases, really. The first phase just started now, and this phase is a very sort of risk-averse phase. It's somewhat of a guarded launch, as people describe them, where we've essentially tried to lower, limit what people can do to lower the potential risks of a new protocol launching. So for now, we've launched with just a few collateral assets, for instance, and we've sort of scaled back on lots of the innovations that we've introduced into the protocol, so that we're sort of testing one thing at a time, and not exposing our users to too much risk. But so far it's going very well, and we're getting lots of good feedback about the UX and how people can interact with the protocol. We've worked really hard on one aspect, which was the ability for people to build up transactions in batches to reduce their gas costs. So that feature in particular has been really popular from a UX perspective. You can come and you can deposit and borrow and do a whole bunch of other stuff in a single transaction on Euler by building up these batch transactions, essentially, which can dramatically lower your gas costs, and it can also allow you to do lots of fun stuff in terms of rebalancing positions and taking on leverage positions and so on, all in one concise, cheap transaction.
Very cool. I like that functionality. And you talked there and a little bit before just about how Bitcoin, Ethereum, and these major assets will be the primary assets that they have liquidity in the markets. You'll be able to stake and earn from those more easily. And I'd like to know if there's also an Euler token or a token ecosystem that's involved into the platform, and if there is, how does that work and how does it provide value to the players in the ecosystem?
Yeah, so Euler in the long run needs to be decentralized. It needs to be managed by a decentralized community of custodians, and those users need to be those custodians need to be users of the protocol. They need to be people that value it, that either generate yield for themselves or are benefiting from the profits they can make from borrowing and trading and doing all the fun stuff on that side of the market. And so they need to respect how the protocol works, understand the risks involved with using the protocols, and really get value from it. And so the idea on Euler is to distribute our governance rights to those protocol users through a process of liquidity mining. Essentially, people who come and lend and borrow on the protocol will be given a future say in how the protocol runs, and as for instance, in what types of assets can be used as collateral on the protocol. And this token, Euler, as we're calling it, EUL, will be distributed to token holders, to liquidity providers from probably early next year. I expect maybe late January we'll start to do that and start to give people a say in how the protocol runs, and really decentralize the management process there. Right now it's obviously controlled by the team, and we need to be really reactive and to changes in market conditions and make sure things are safe to use. So we're fully in control right now, but we hope not to be in the very near future.
I like it. And that's obviously something big to look forward to in 2022. And I'm guessing that the DeFi market will do what it did this year and just completely continue to grow and change and alter. And since you've already been following it, building out the protocol for the last 16 months and more, I would love to know if you have any insights or what your vision of what you think the DeFi industry might look like 3 to 5 years from now, and how Euler will fit into that.
Yeah, that's a I mean, it's really tough to make predictions in DeFi, as you know, because the place moves so quickly. I can't really believe what it looks like now. If you'd have asked me a year ago what would it look like today, I would have got it terribly wrong. So, but I would, my big bet on the way that things will shape up is that if we just focus on Ethereum, because that's the area I know most about, I think we'll see Ethereum layer 1 become this base layer that is used by large DeFi native institutions, crypto native institutions, and then a lot of the activity I expect will move on to these kind of silos on layer 2 networks, and that'll reduce the gas cost for everyday users, allow them to trade and interact on layer 2s. So I think for now we're seeing this sort of migration of protocols to layer 2s, and people are starting to experiment there and get to grips with them, but there's a lot of cool stuff going on. I think 2022 even will be a really big year for layer 2s. Does Euler have plans to go to layer 2 anytime soon? Well, it's actually a little bit tricky for us because we build on top of Uniswap as a core dependency, and right now, they're still just getting started on layer 2, so we have to take things carefully and go steady really, and follow them when the time is right. But I think, certainly next year, I think we'll start to explore moving on to layer 2 solutions ourselves, and providing an opportunity for people to use the protocol at a lower cost, because layer one right now can be a little bit expensive for ordinary folks.
Definitely, and you do have that combining transaction functionality to help, but I was thinking that in the back of my head. I'm like, where are the other layer twos and the scaling solutions, and will those come into play in Euler? So thanks for dropping those hints on that, Michael. For the viewers that are looking to learn more about Euler as you come out with these updates, and just with the products that are out right now, and how to use the platform, and to get into the communities too, what is the best way for them to get involved?
Well, I would say, firstly, check out our website. That's euler.finance. There you'll find the links to pretty much everything else. But we're very active on our Discord channel. That's a great place to come if you want help, if you want to ask questions. You'll get lots of support on how, with how to use our testnet. So that's a really great place to start. It's just come and experiment, play around on testnet, build some crazy batch transactions, take out some risky loans, see what happens. And then, beyond that, I think our Twitter is a great place to just keep up to date with updates. We have a blog as well where we post not just updates, but also a lot of our core research gets put on our blog. So we have, for people that really like to get into the weeds of things, there's some nice technical articles there, sometimes with even some maths in them, which I know some people find scary, but I think it's important to really, make sure that we're really transparent about what's powering these protocols, so that people can understand them from the ground up. And then if you really want to understand how the whole protocol works, our white paper gets a lot of praise. It's very, very clear and concise white paper that it details a lot of the innovations on Euler, about how we sort of maximize capital efficiency, how we limit risks to users, and so on. I hope that people will check that out. Yeah.
Amazing. Thank you so much, Michael. I will leave all those links to the website, community links, and the white paper as well for Euler in the description box below. All the best with the platform moving forward. I'd love to follow up in the near future when the next stage is coming out. And until then, all the best.
Thanks, Ashton. Really appreciate it.